Hey, how's it going? My name is Sam Sauter. I've been a performance marketer for close to a decade now. I've worked with some of the biggest coaches, consultants, and personal brands in the world. I've worked with billion-dollar fund managers. I've worked with software companies that have raised hundreds of millions of dollars. I've worked with influencers with 40 million followers. I've done it all. Okay. In today's video, I want to show you a new client that we brought on. We're under NDA. Can't talk about who it is. Huge personal brand, several million followers. We were asked to take over the performance marketing, and I want to show you we're now scaling $1,000 a day to about $3,000 a day. It's a really fun time in the company. I've kind of gone from 0 to 1 with them, and now we are kind of going to 1 to 10, and 1 to 10 is actually easier than going from 0 to 1. Okay, so I want to show you how this is shaken down since we started working together. They fired their last media buyer marketer in December because he had a 0.96 return on ad spend, and he had about $80,000 of fixed expenses that he was incurring. Business was losing a lot of money on both the variable cost level and both on the fixed cost level, so it was really bad, right? So we had to shut everything down. They brought me in. I started my campaigns literally January 1st. We spent 9 the first month. We spent 16. Then we spent 23. Then we spent 30. Then we spent 54. Then we spent 56. In August for this month, we will spend, we budgeted out. I'm projected to spend about $90,000 because I have conviction in our sales process. Average ROAS about 3.41. We've generated $700,000 in revenue on this new campaign. Okay. Now, this client also asked for 12-month projections. That 3x ROAS holds true at scale, okay? Then you can see here operating at about a 20% net margin. You can see here then for this month of $80,000 in ad spend, we're probably going to do $260. Last month we did $194, okay? We have about $40,000 to $45,000 in fixed costs, 20% sales team commission. I'm trying to be very, very conservative. It's really closer to 15 because we're managing a lot of that. It's in-house. We're saving some fees. As we scale up to $1 million per month, there's going to be close to 10 reps. There's going to be an additional layer of management that's going to drive that total cost to about 20% of top line. So we'll kick off 52% commissions for that. And the net margins, if we are at a 3x return on advertising spend, would be about 32% or about $83,000 in profit. That's a big deal. That is effectively $1 million per year profit business. Okay. It's very, very exciting. Okay. And you can see here, if I'm going to scale this 1.2, 20% month over month, you can see, which is, I feel like I can do. Okay. One other offer to multiple six figures towards like $500,000-600,000 a month. We were a big part in that. We weren't the sole contributor. There were other marketers part of the team. We took one big offer to about $650K a month in cash collected, $1.5 million in revenue on that account. And so we think we can do it again. This will be a really big test for us. We've never done it in this particular niche, in this particular vertical, but we're using our same tools, playbook systems that we have in the past year. Okay. So you can see here that if we grew 20% month over month, we kind of be right around 700 or 800 kind of by January at the time of this recording, $700,000 a month. We're right at about a 10 million per year run rate at this point, and that would generate about $250,000 to $300,000 a month in profit. Okay, we have a very lean. Now this fixed cost base is going to raise from 40 to 50. We run a very, very lean operation. We use a lot of AI, so really there's not a lot of fixed expenses, which is why I love these businesses. I almost view myself as like a trader, an arbitrager, in that I have very little exposure, I have very little risk, because the moment that I start seeing earlier leading indicators that campaign is not profitable, I can pull back, and I have very, very limited exposure. Right. So I love these businesses. I love these e-learning businesses because I have so much ability to make a ton of money, pull back if there's any risk or any involvement, and then I can redeploy into other assets that have strong revenue retention, enterprise value, and long-term stability. Okay, this is what took me from, I moved to Los Angeles, California. I remember I had $1,000 in my bank account, and I remember when I started putting $30,000, $40,000, $50,000 per month in my pocket, it was all because of this system and this process that I've been refining over years. Okay, so you saw the data that we have thus far. You saw the projections that we want to take from, taking it $200,000 a month to $1 million a month. Okay, that's how we're going to do it. Now I want to show you kind of what this shakes out and what it looks like in terms of the everyday data. And I just really want to show you guys how we're scaling. Okay, how you can be really, really confident, be really aggressive with your ad spend when you're deploying serious money into ads, and how to make sure that you don't lose money, and how to cut your losses really quickly if you have the faintest sign that you might start trending in the wrong direction. Okay, so you can see here clear patterns start to really emerge. And once we were going from 0 to 1 effectively in January, but then right around June or July, I felt really confident in the model, the sales team, the script, pricing, everything was clicking. I heard Ryan Klog say this recently. He's not a good friend, but like we've become reasonably good friends recently as of late. Some amazing guy. Okay, and he's talked about this 30% figures like the honeypot. Once your close rates are about 30%, you don't really want to change anything. If you're at 40, 50%, then raise price. price. If you're at, 20%, then either work on your script. But if you think that's pretty good and that's dialed in, you might want to consider lowering price to get it in that 30 range. That 30 range is, it's funny. I heard him say that and I was like, that rings so true in my real world experience, because if the sales reps aren't getting enough rewards and the feedback isn't positive enough regularly, okay, if the wins are too far and few between, it's a surefire way for them to get demotivated and lead and for their risk sales team churn and stuff like that. Okay. So you can see here, let's break down all the numbers. Okay. So we have ad spend, organic revenue, high ticket upfront cash collected. We have installments. Those are payments made on existing customers. We have webinar sales. We're doing a weekly cleanup webinar. We have a liquidation percentage. We have a low ticket downsell that allows us to recoup a portion of the advertising spend. We have a lead nurture campaign. Once somebody is booking calls on our calendar, we're running engagement campaigns for 14 days after they book that window and they're in that crucial buying state. Try and warm them up. We use Jeremy Haynes' strategy called the hammer them sequence. We're running 20 pieces of unique organic content, and we're basically just owning their entire newsfeed. They get served 40 to 50 pieces of unique content. It's actually 50. Our frequency on the campaign is a 50 after somebody books the call. So they come up very privy, very warm, very ready to buy. Okay. So you can see here, our total paid ads, the cash collected. This is both all the cash collected in the company, excluding organic revenue. Okay, that's very important. What is our return on advertising spend? It's 3.2. That's our average since we started on this account. By the way, we're 1 week into August at the time of this filming. So we're tracking towards 200K cash collected, 260 rev. Last month, we were at 194 cash collected and 233 rev. 194 cash collected, 233 rev. Okay, now let's look at the new customer cash collected paid ads ROAS without installments. Okay, this is really important because I want to know, once you start really scaling aggressively from I've been fortunate enough to be a part of some big marketing teams where we're spending upwards of, $10,000 to $13,000 a day. Was one of my biggest accounts ever, managing that level of spend. Everything's moving very, very quickly. And if something gets out of KPI, you have to go from checking something once a month where I'm spending a couple $100s a day to sometimes every hour I'm spending $10,000, $15,000 a day. And I need to be so dialed in the minute something starts not looking right. I need to at least be aware of it. I might choose to not make any changes and not make any changes. It's a different conversation, but the point is you have to be aware of everything very, very quickly. Okay. So this is very important because sometimes if you do, for instance, let's say in June or July, you have a lower upfront cash collected percentage. You can see here that from June to July, we slipped from 73% to 64% of cash collected. I wouldn't really call that a statistically significant or meaningful data set. I'm looking at the stuff that's clearly a big bottleneck and hemorrhaging, which is candidly it's a show up rate for this account. Okay. But you can see here that it's really important. I see a lot of guys, they'll have a great month of revenue, not in cash collected, but then August performance starts to tank. They're getting all these installments from July customers in August. So, my return on ad spend is good. No. When you're running a high ticket call funnel, there's always going to be delay. There's always going to be a lag in terms of your performance. Okay. And you can't attribute what is happening now you can't attribute today's revenue to the actions that you're doing today. Today's revenue is what you did usually about 4 weeks ago, depending on your sales cycle length. And there's a couple other factors that go into that. So you have to look at the early and the leading indicators today, which is cost per lead, cost per call, show up rate today, and judge yourself based on that. And then let the sales pipeline play out as it will. So you can see here that our average since inception is a 2.7 new customers. And then we collect another goes up to 3.2 if we include the installment. So no real issues there. Okay. I also want to look at revenue, new revenue return on advertising spend. Okay. You can see it's about a 3.5 since inception. So we're collecting, 3.2 over 3.5. That's, close to about 90% of the cash that we're collecting. I think it's a really good product. We're doing a good job of recouping all that revenue there. Okay. So I want to know if we have a low return on, we have a low month where we're not collecting as much cash, but the contract revenue looks pretty good. Then I want to talk to the sales team and see why average upfront cash collected is not looking good. And then also maybe in the next month, if I notice I have a lot of installments due, I can be a little bit more aggressive in my media buying because I know that I have some of those payment plans and those installments that are coming, and I know my average collection rate. Okay? So that's how granular you have to be when you start going at scale. Okay, now we're moving from $1,000 to $3,000 a day rather quickly. We're only a couple days into the month of August here. We're spending $3,000 a day. Average up in this point, spending $1,500 to $2,000 a day. Okay, so let's see. So you can see cost per lead is rising as we scaled. We were paying, $50, $60, $70 in the beginning, upwards now of $80 to $130. We're doubling the amount of creative output this month for this particular account. We have a very, very good job of the setter team of booking those appointments, and we have a very poor show up rate. Okay, this show up rate is showing that our show up rate is 34%. This is without cancellations. Okay, so if somebody's unresponsive or they're not returning our phone calls or outreach attempts, or they just don't appear qualified, we're canceling about 20 to 25% of bookings. Okay, this is not taking into account those cancellations. Okay, this is total number of calls booked to total amount of calls that show. Okay, that's where I say without cancellation. Now the show up team, they cancel all their appointments, and of the ones that they didn't cancel, the show up rate on those is about 50%. Okay, we're trying to get that up into the 60s, and the main reason for that is our email open rates, we believe, is in the 15. It's about 15%. So it's really bad. Our email deliverability is basically shot. Okay, so we have a big problem right now, which is that they're not consuming any of our email nurture content prior to getting on that sales call. Okay, other thing that we're doing is we're switching to a dialer that has local area matching code features. Going to allow us for a higher pickup rate, higher connection rate, or those appointment setters prior to that prospect. Okay, but we did raise the show up rate by about 40 to 50% from what it is by running those lead nurture campaigns. So remember, after somebody books the call, they're getting targeted with framing content that is very a lubricating force towards that sales process, that is running them through all the common objections, all the common obstacles. We are effectively owning their entire newsfeed. Imagine that 15 days after somebody books a call with us, they're getting served 50 impressions. Okay, and these are not short form pieces of content. These are sometimes 5, 10, 15-minute long videos that they're getting targeted by. So they come in proper one. Okay? Average contract size, average right around $4,500. If something's deviating more than 20% or less than 20%, I don't really care that much. You can see here, I don't really view that as anything that's statistically significant. Okay, the average contract size is healthy. Close rates a little bit down for the month, but also not super statistically significant right now. We're right around 20% live call to close rate. They have about 85% offer rate. The reps are actually doing a good job. We've had marginal improvements in show up rates since we brought in a new manager at the beginning of May that I vetted, hired, and trained. Very important that this hire has subject matter expertise in whatever it is they're selling. More, in my opinion, is more important than having traditional sales background. But obviously for this person, they had both, and they've been absolutely crushing it. You can see the numbers moving in the right direction even as we continue to scale. And the traffic typically goes to colder and colder intent as you scale. And you can see the close rates and the show rates actually start to suffer as you start getting at scale because you're tapping into lower intent audiences. Okay, like right now, what happens is if, for instance, you're running a fitness offer or something like that, Facebook has 50,000 data points. The minute somebody starts opting in and they start clicking on things or booking calls with things that are related to a fitness offer, they now get labeled in that bucket of being in that in-market demographic of those people that are actively looking for fitness solutions. As you start to scale, you go from a 1% lookalike to people that are very, very close and very probable to convert, look like that ideal person, 2% to 4% to 5%. And you basically just move from that 3% of people that are in market, that are ready to go, that are buying right now, to those people that kind of need more convincing and that are a little bit of the, I would say, the most engaged, highest intent buyer. Okay. All right. So you can see we're keeping an eye on kind of the main statistics here. Cost per call that's taken. Basically, this actually it's about a 30% increase here. So I'm going to mark that as red. We'll keep an eye on that. But we have lower show rates earlier in the week. So I'm not too worried about it right in this second. So I'm going to mark that red. Keep an eye on that. See if it is 1,900, averaging 1,600. Okay, on a $5,000 package. Now let's go into our kind of standard tracking sheet. So with every client that we're running, most of our clients are running a high ticket call funnel. It's my favorite funnel to this point. For so many reasons, it's easier to set up. So you can get proof of marketing, proof of fit, go from 0 to 1 much faster. I've spent 6 months before writing a webinar that did not convert. Okay. So after kind of going through that, it wasn't 6 months quite, but it was probably 3 months of my life where I wrote a 3-hour presentation and presented it every single week and made iterations on it. It was like my chief focus for 6 months, and it still didn't convert. Okay. So that's the risk when you're kind of building more sophisticated, more complex funnel. Kind of same thing applies if you're doing low ticket, but high ticket is very simple. You can get something up and running. And I'm just very, very good at managing sales talent. So I just prefer this model. This is the model we're running with most of our clients. If they come to us and it's not 0 to 1 and they have an existing system that is, webinar based or it's low ticket funnel based, awesome. I will drive traffic to it and I'll run CRO to it. But if we're going to 0 to 1, it's tricky a lot of times to get that initial proof of concept. Okay. So you can see here, we track all the leads, qualified calls every single day because we are now scaling to $3,000 a day. If, what I was tracking at $100 a day, I might track that once a month. I now need to track it once an hour when I'm spending 10 grand. Okay. So you have to get more granular and look at those early leading indicators faster. Okay. Now, this is my biggest secret. This is my hack that I've kind of done my whole career is I always want to know what's break-even CPA in terms of net for the entire business. Okay. Most people can't scale, in my opinion, because they do not know their numbers. They don't know their numbers. They don't know what break-even CPA. You want to make a very, very simple calculator here and run yourself through a few different models. So you have 60K a month in spend, 45K a month in spend, 120K a month in spend, 90K a month in spend. You have varying ranges of ROAS. Okay. Our average, these are all our average ROASs for different months. Okay. Cash, commissions, fixed fees, payment processors, refund rate. Okay. All right. We have a 3.5% refund rate on this offer, profit and loss. Okay. For the month. Okay. But you remember, you don't want to track that wait a month to make a decision. You want to look at it weekly. So we have that broken up here. So you can see we're 1 week in, we're only a couple days into the month here. We're at $10,000 in profit for this week. Okay. Now keep in mind, I know it's not a tremendous amount of money, but we're scaling aggressively. So our net margin has taken a dive to about 22%. We've been higher than that prior to this. Okay. So the goal for this is to get it to about 30% net margins at about $1 million a month in revenue, take home close to $4 million a year in profit. 3.6 million is the goal for this particular offer. And I think we're in a place where we can finally do it. Okay. Now, what you can see is as you scale, people get super hung up on their ROAS, but what you really want, you want to optimize for the absolute amount of money that you're making, right? So you can see here, you have to ask yourself, okay, if I spend 60 grand a month, my break even ROAS is 2.4. So if I get a 3x ROAS, 60K a month in spend, I'm going to be profiting $28,000 a month. Not that interesting, okay? Or I can say, all right, I'm going to get that same 2.6 ROAS at, call this 90K a month or 2.8. Now I'm making 50 grand a month. So I'm constantly playing with these numbers, right? Like this is my average is 3.2 historically. So if my leading indicators hold up, usually if you're early in leading indicators like cost per lead, cost per call, cost per live call are the same. It's pretty amazing. Once you have a consistent team in place and you're ramping and you're training your sales team, that number will hold up remarkably consistent. Like advertising is such a lesson in statistics. Like it's so consistent once you hit it. Like it's unbelievable. Like we had 3 months in a row where our reps average earnings or average cash collected per book call is within $1 of each other. Like think about the statistical craziness of that after hundreds of live sales calls taken over a month, that our projections were down to the dollar. I mean, it blows my mind how like one impression out of a million can turn into a high ticket buyer and how consistent it's just like, it blows my mind sometimes. But with all that being said, so I have, here's kind of my average. Here's where I'm like really making money. I'm like, this is exciting. This is where I really start to scale. Okay. Once I scale, I have a 2-week lag from when I start receiving sales, right? So I know that I'm going to take a dip in short term in my return on ad spend because the revenue that I'm seeing today is what as a result of my spend 2 weeks ago with a high ticket call funnel. Now, if I start spending a ton in week 1, I'm going to see that reflected here in week 3. Okay. So what I'll do is once I'm kind of in the green here is when I'm gassing things up and I'm scaling about 20%. And I'm doing it, my scale days are only during Sundays. Okay. Because if you look at our data, you can see here's our high ticket for last month. You can see not a lot of sales come in on Friday, Saturday, Sunday. Our sales team just doesn't want to work a ton. Our show rates aren't quite as good on those days. So what we do is, do you think that I'm spending a ton on Friday? Absolutely not, because I'm going into a 2-day window when historically I don't have a lot of sales. But what I'm doing is if I get the green lights, if I'm in that green zone for my target amount of spend, then what I'm doing is I'm increasing spend on Sunday morning by about 30%. And sometimes if I'm still hanging out in green, I'll do it twice. So I'll do 30% in back-to-back days. So I'll go from 3 to 4 grand really quick. This is what's so fun. Like this is to me the most fun time in any business is going from 3 grand a day to 10 grand a day. 0 to 1 is so brutal. I hate doing it. I love going from 200 grand a month to $1 million a month. Okay. That's like our sweet spot. Like that's where we feel super, super comfortable. Okay. So if I'm in the green zone, cool. I'm blitzing, I'm spending. By the way, the cool thing about blitz scaling and scaling very quickly is that now my cadence of how many split tests I can do are much, much faster. Like I can run 4 or 5 split tests a day and the CRO on the funnel starts to get really amazing. It starts to get really dialed in. So I'm always having this spread, right? I have my break even ROAS and I have my current ROAS. And as I'm scaling, it compresses and I got to fight, figure some stuff out, get better CRO, widen the spread. And then I scale again and then it tightens and then I scale again and then it tightens and I got to do CRO to widen it. So that's ultimately what you're trying to do. Okay. Now, what I do now, I'm in a position now where I'm financially free. I've done well from internet marketing. Okay. My investments pretty much pay for my entire lifestyle at this point in my life. So what I'm really focused on doing is I don't need to make any money from this. So I want it to compound much faster. Like there's the arbitrage that exists on media is so much greater than a stock or Bitcoin or crypto, even though I'm a huge Bitcoin investor, because I can triple my money every single 30 days. So I had a mentor years ago, and it's very sad this person actually went out of business because they were crazy. They didn't understand risk tolerance. They would scale to the moon without a cash base. And then if they're doing $1 million a month and they have a couple bad weeks and they take $100,000 loss, they didn't have the cash reserves to weather that and keep going. Okay. So it was really unfortunate, but I remember I was a business owner making, 30, 40 grand a month at the time. And I took every penny out because I was so scared of being poor again and having to work a shitty job or, do these jobs in the business I hated. I wanted to take as much cash as I can scan off the business. And I was piling investments into mainly Bitcoin was my primary investment, some other traditional investments and stuff like that. And I did that for years. And I watched another guy have the complete opposite. Okay. He reinvested everything in acquisition. He took no money out for 18 months. At the end of the 18 months, I had a couple $100,000. And then he had a $1 million per month cash collected business. It kicked off 250 grand a month in profit. And I was like, fuck, like I just didn't do the math. I was all excited about Bitcoin doing 40% a year. When in reality, he was, he saw that even if the craziest investment ever, it doesn't compound. There's not the arbitrage there like media. Like I think Hormozi's entire portfolio company is an arbitrage on media. All he talks about is CAC to LTV of like 10 to 1, 20 to 1, 30 to 1. That's why his portfolio is number one in the Inc. 5000. He's the greatest marketer in the world. He's connecting that now with business opportunities that have strong revenue retention and the ability to build true enterprise value, which is candidly the thing that's missing from a lot of internet marketers, is that ability to get out of this arbitrage land and then eventually start deploying the assets into things that really do have revenue retention. Okay. Most info offers that you will work with, they don't have the revenue retention because the information becomes decreasing. It becomes so irrelevant and less valuable as time progresses. Okay. So I use this system that I'm teaching you now to create a bunch of cash, to drive a lot of sales on the front end. Yes, we do have a little bit of back end revenue and stuff like that and ongoing coaching and management, but I've taken that all into some other investments that have built true enterprise value. Okay. So the point of all that is we're going back now to arbitraging the media and just getting better at front end acquisition. Is every day I'm kind of looking at my daily spend, seeing where I am, how close am I to break even CPA? Because I scale from 40 to 60. Now I'm kind of at 90. And I'm even considering if I can get back into kind of purple and green, then I'm going to go to, I'm actually going to go to 120K a month in spend. So that's $4,000, right? And then I can start to see what the results of that. Okay. And every single week I'm getting updates into terms of the actual profitability of the company. You can see for this first week, we only made about $12,000 in profit. Okay. So that's kind of the system that I have. Like what shocks me is like these business owners don't know their numbers and they're surprised at the end of the month they're not making money, versus every single day, the first thing that comes to mind is how are we doing today? It's never a surprise, right? Like if I'm having a bad month, I'm not going to go to the end of the client and say, hey, we lost $100,000 at the end of the month. I'm going to tell them, hey, our trajectory is heading in the wrong place for this month by the 4th or the 5th. And this is the changes that we're making to try and improve that. Here's the constraints that we're working on. We may take a loss by the end of the month, right? So that's what we're doing. Now, because we have such high amounts of cash reserves in the business, we don't need this. I want to scale as fast as humanly as possible to the point where I get really close to break even ROAS. I'm even willing to go into 1.6 or 1.8 because a $30,000 loss isn't that meaningful. I'm getting so much data for this. I'm building an email list. Okay. There's going to be kind of a downstream impact, which is you're going to see sales that happen 3, 6, 7 months from now. So I'm really aggressive. I'm like, now that I'm kind of in this position where we have a lot of cash on the sideline, it frees me up to take these huge risks and we will scale up very, very aggressively so long as we don't go so far near break even ROAS. In this entire career of running this offer, okay, since inception of this offer, we've never gone below 1.3 or 1.2x ROAS. We've never even gone below 1.7x ROAS. So that's why it's kind of like the lowest scenario here. I don't think it ever would go below 1.7. Okay. And we've had months where it's as high as a 6, but it was kind of because a couple big deals that came through. We have in my system, the way that I scale companies is when we get people on the phone, we have a 3-tiered price points. We have the highest tier price point as an anchor price point, then the middle price point that we want people to go after, and then the lower tier price point to get people that are kind of like the fringe deals that are a little bit financially unqualified that somehow made it past all the financial qualifiers that we have in place from the setter to the application. They still made it on the call. They were on the cusp of being qualified. That's what that third package price point is for. That's a long-winded way of saying we occasionally get our ROAS that gets above a 5 or a 6x for weeks at a time because that $20,000 thing that wasn't even really meant to be sold, but was there as an anchor, got sold. Okay. So that's fundamentally the whole process from A to Z. I don't think that I have anything else to really share with you guys today in this video. The purpose was to just show you that people don't scale because they don't know their numbers. They have this terrible fear of going outside their comfort zone and spending more than they can. If you can kind of just trust in the data, trust in the numbers, have perfect clarity as to where you are, what you need to be, how big is your spread? Okay. Are you riding, if your spread's super wide, then scale like crazy unless you have this crazy lifestyle that you need to keep up, which don't even get me started. That's like a terrifying thing for me. I've always kept my lifestyle super, super low. Even when I was making $40,000, $50,000 a month, my expenses were still $44,000 to $5,000 a month. I was living on 10% of my total income because I wanted to free myself up to take really big risks like this. Okay. So when I have a big spread like this of like 4.5 and my break even ROAS is 2, I would scale as fast as I can to go down to 2. And I want it to break. I want to lose a little bit of money because we have have about $150,000 in this company account. We'll be okay if we take a $15,000 loss. That's not a big deal. And the amount of split tests that I'm going to get to achieve and the amount of data that I'm going to be able to consume because of that accelerated rate gives me a very, very high confidence that we're going to be able to make that back. That is a worthwhile bet for me. I would have to basically be at break even or 1.8x ROAS for 7 months to completely bankrupt this company. But I think people just, they don't clarify it and they really don't map out the range of outcomes, the projected probabilities of all those things happening. And then that's the thing that keeps them super scared from scaling, is because it's just this amorphous thing. It's like, once you define the fear of what's you're scared of, what's the real tolerance of that, where can you sustain that? That's when people, in my opinion, don't take calculated risks. Okay. Also, a thing that ties into that is that when we are coming into a business, the other thing that we do is we have standard systems in place for accounting and bookkeeping. For these types of businesses, these media and consulting and coaching businesses, these arbitrage style of businesses, we are always setting up the P&L to basically have our gross profit. So we have sales minus refunds. And then the things that go into gross profit for these types of businesses, we have sales commission, ad spend, setter, closer commission, like all that's laid out. And then we have our fixed fees. So that's our SaaS costs, our contractors, our fee, any kind of CSM or people that work internally in the business. And then my number and then it's very, very clear for me, because I want to know how much gross profit do I need to generate from my arbitrage that I have up here before I start to break over my fixed fee, right? And now with AI and its ability to take off just so much people's workload for fulfilling on these businesses, we can keep our fixed costs at $50K a month for $1 million a month businesses for a lot of our clients. So we keep our exposure so low, because it shocks me how many people lose money in this industry and go out of business because they don't understand this concept. I view myself as almost like, I'm like air, like you just can't catch me, right? I never give you exposure or risk. Like when I was fortunate enough to learn from Tai Lopez and spend time with him, be part of his media marketing team, okay? He never incurred fixed costs. It was all variable costs. He was willing to pay crazy variable costs, but never fixed costs, because that's how people get caught and that's how they get exposed. And there were some pros to that and there were some cons to that, but the media costs and the variable costs don't scare me, because I know that as I scale down, my show up rate's going to improve, my close rate's going to improve, and my ROAS is going to go back up to where it was. So that's kind of what that's fundamentally what we never feel like we're never going to get caught. Like when we're going to really scale big and we're going to capture a big amount of spread and a big amount of profit to rip out of the business and either reinvest or put it back into different assets and stuff like that. Or conversely, I just completely lost my train of thought. What was I going to say? That's hilarious. I completely lost my train of thought. Okay. So note to the editor, just please cut this part out. Okay. But that's why I feel fundamentally that I love these businesses, is because I can have very, very small fixed cost base, really scale aggressively and capture this big net profit and gross profit for the business. And then the moments where things get challenging, I can pull back and cut my expenses to near zero. And my ROAS is going to go up. I mean, it's amazing how democratized advertising is that the lower budget people actually have a pretty big incentive, an actual big advantage, that they're dealing with the best traffic. So that's what people don't realize, is that it's so, you're going to be okay. Okay. If you have a proven, validated system and it's consistent, okay, on the acquisition side of things, you don't have to be scared on pushing up if you keep a very, very lean, low cost, fixed cost base. Okay. Because you know that your variable costs, your only risk there. And the minute you start pulling back, your ROAS is going to pull back up and you're going to be okay from that. I think where people just get really tripped up is they don't have models like this. They don't know their numbers. Okay. They don't know their max cost per call they can tolerate. They don't understand financial modeling. Okay. And they're not budgeting. They're not forecasting like this, and their profit and loss just comes as a surprise in the month of like, holy shit, we lost money. So that's pretty much everything. I mean, that's how we offer. I'm going to see if there's anything else that I missed that I wanted to cover in my notes here, but that's pretty much it. That's all I have for you. That's about a 30 everything I've learned in scaling ads from K a day to 15K a day in my career. Currently at 3K a day on this offer, scaling from 1 to 3K a day. Do you have any interest in me having me help consult and scale your company? We are not taking on too many clients right now at this time, but we do have some affiliates and people that I can make sure you're taken care of and send you elsewhere. We also have some consulting options. If I'm going to be super hands-on and super invested in the business, I probably don't have capacity for that right at this second, but nonetheless, love to have a conversation, learn a little bit more about the business, and see if I can play a small part in helping you take it to the next level, whether that is me doing it myself or me referring you to somebody else that I know. But here's our website. Here's everybody that we've worked with. Here's all our case study, all our results, all our track record, all of our testimonials, FAQs. Book a call. If you're doing less than 100 grand a month, we have done with you. We have consulting offers where I can help you get to that 100K a month, where you might be a fit for our agency. But that's it. I hope that was helpful. I really appreciate your time, and I'll talk to you soon. Thanks.